Hey Stockhouse, it's Bruce Campbell. Today's March 4th, time for another edition of Markets in Motion. And wow, markets have definitely been in motion. Nothing like some geopolitics to bring out the volatility in the markets. Just looking at the VIX, we can see here how it's spiked up just in the last few days here. You can see that, anytime it's below that 20 level, it's, pretty safe environment, pretty easy to invest. Once we start getting into that 30, it becomes certainly more challenging. We like to sit aside and really wait for that volatility to drop back below the 20 level before we do anything significant with our portfolio. Wanted to look at this a little bit hard to see here, but if you take a look at what's behind the doors here. This is looking at the 3-month VIX compared to the current VIX. Anytime it drops below that 1, that is definitely it tends to be a good bottoming signal. The other thing here is looking at the 3-month VIX. Anytime it moves up above the upper end of the Bollinger Band, which is where it is right now, that's also tends to be a really strong bottoming signal. When you put a few of them together, that could be the case. We know that the markets have been extremely volatile, so look for that opportunity. What's moving and what's not? I just want to look at this trend. This is in the U.S. These are the different sectors, and you can see here the weekly streak. Well, what's been moving? It's energy right up at here at the top. 11 weeks in a row. You can see nothing else really has been trending except for energy. So this started long before any missiles were fired in Iran. Looking at sectors for the U.S. market, this is kind of interesting. Clearly, the energy sector is leading. Materials is up there, but we're starting to see industrials. And then over here, this is what I think is important is when we look at the utilities index, and then also the REITs are in here as well. So the market's definitely taking a little bit more of a conservative approach, and as it's referred to, would be more of a risk-off approach, with the exception of some of the commodity stocks, which have their own reason for moving here. If you look at the TSX, very similar. Energy's been strong, and I mean, it's had that strong trend. And then again, the same type of thing. So utilities are really improving and heading toward that leading quadrant, and consumer staples are as well. So that again is just giving you the sense that the market is moving to a place where it wants to be a little bit more defensive and conservative. Looking at GLD, we've seen fairly big moves with the commodity price of late, and what I wanted to highlight here was that last week we saw a fairly significant move up as far as the inflows. This is looking at the fund flow into the GLD ETF, and you can see it's one that we haven't hit too many other times in the past couple of years. And so, anytime there's that much fund flow, it's going to create a bit of volatility, because people tend to chase right at the very last period, and then you could potentially see a down period. Same thing with silver. If we look at what happened in last week's fund flow, it was again right up there. We haven't seen this level of fund flow in quite some time, and so it's not too surprising that the volatility is there, just because of the fact that when everyone gets crowded into one area, it can often go in the opposite direction. That's it for this week. Have a great week, everyone, and good trading out there.